Hi everyone, welcome back to Be Rich. I have Anand with me today, and some interesting news came about which we read about, and I thought we should discuss this in this channel. It's not political; it is something I think purely academic and even I would say practical. When it comes to living in a country, you should know why macroeconomic things such as trade and trade deficits are important and what implications it has on ordinary citizens, and even if you're not a citizen there and you're a foreigner being there, why trade deficits are important and the implications it has on your day-to-day life. So Anand, this news about India's trade deficit, and first let's explain what is a trade deficit.
Okay, the government has changed some definitions. Let's go with the classical definition. The amount of goods you export and amount of goods you import, the difference is called the trade deficit.
Okay, so going out minus
And what
coming
is
in
coming in?
is the cash, is the
Cash, either cash comes in or cash goes out.
okay, so you're either in a negative or you're in a positive.
Positive. You trade in the reserve currency. Within India, you can trade in rupees, but when you trade with a third party, you trade with the reserve currency. Right now, the dollar is accepted as the reserve currency of the world. So your trade deficit measured in dollars. What has happened now is the gap between trade exports in goods and trade import in goods is $41.8 billion, which is a record high. That means if the same trend continues, in about 16 months, we'll run out of all the forex reserves we have to pay for the exports, assuming that nobody else is asking for dollars.
Wow.
India has always had this problem. But then you have the other thing. India has services like software and other services. So you have a services sector which is called as invisibles because you are not basically doing very big
There's
services
no actual physical.
physical movement of goods. But India is a major player in services exports. So we run a trade surplus in services exports. So if you put services export surplus in, that's about $20 billion. So your net trade deficit comes to $21.8 billion
On the positive,
on the negative.
on the negative. Okay.
Whereas your negative 41.8
And this pulls it up.
pulls it up to 21.8. So some actually this is not the way it should be. Then what happens is there are a lot of Indians whom we have exported as labor outside, and they will be sending money in.
That's what we call remittance.
India is the biggest remittance receiver
Receivers.
in the world. So we have about $8 to $9 billion of receivables
This
coming in.
receivables and remittance coming. Wow, that's a huge number.
So net your actual deficit is $10 billion, which is still a big number. Now what used to happen before is these net used to be covered by capital flows coming in. What is capital flow? Foreigners investing in your company, in your land, in your bonds. People who are investing in India, and you are reporting a current, you are managing your balance of payments. Net, more money was coming into India than going out because people were starting companies here, people were investing in India, real estate, and all those things. So you are running a net positive balance. Now, why is it different this time? Two things. People are taking money out of India, and people are not bringing money into India. Both these things are a problem.
Okay, so remittance coming into India has come down. At the same time, outward remittance has gone up.
Calm down.
Okay.
Because I'll tell you why. FPI is not investing in India. You've been seeing the papers that
Yes.
FPI is very low.
Yes. The
So
foreign
that is
portfolio
capital.
investors are low.
So capital flows are coming down. At the same time, FPIs are
I'm exiting.
selling and exiting. Not only selling and exiting normal stocks. Now Hyundai is selling its own stock to take money out. So Hyundai has
Okay.
taken money out.
Okay.
LG has taken money out
They're all seeing this as the opportunity
to
to
encash because their valuations are sky high.
understood.
Whirlpool has taken money out. So they are seeing sky high valuations in India. They think these valuations are not justified. Somebody is willing to pay me so much for my company, I take some money off the table. So this is also happening. Then lot of startup companies had put money into India with the idea these companies will be originally listed outside India. But now what has happened is these companies have been listed in India because our valuations are frothy. So like Swiggy, Zomato were all funded by foreign money. When you are listed into India and you sell,
You're getting Indian currency,
they are getting Indian currency and
which they
they are taking out of the
like
country.
SoftBank will want to exit. Yeah.
Where like SoftBank wants to exit. So you are having two exits. One, money is not coming in. Then publicly traded stocks are being sold. That is one exit. People are selling their own company. That is second exit. Third is foreigners selling
Your
startup
yeah, your
vehicles,
angel investors, venture
selling and going.
capitalists.
So instead of capital inflow, you are having capital outflow. Normally, this 10 to 11 billion dollars gap after remittance, Indian labor remittance, and software exports would be funded by money coming in through capital investments. You are not having capital investments, you are having capital exit.
Okay, flight of capital.
You are having flight of capital. So this 10 can become 15. This 10 used to become plus minus 10 used to become plus 2 plus 3 plus 4. Now minus 10 is becoming minus 15 minus 16.
So the reserves which we saved when it was plus 2, plus 3, plus 4 is being eaten into.
Is being eaten into. This is not the way it ought to be. So how do you balance the system is you allow the rupee to fall.
Okay, so
Now we have
then
seen the
our exports will
Japanese
become
competitive.
okay.
Like the Japanese yen is at 153, does not mean Japan is a weak country. So you allow the rupee to fall to 105, then the foreigners will stop taking money out. But for some reason, the government is defending the rupee. You allow the rupee to fall to 93, 94, then this capital outflow will
You'll stop bleeding.
stop bleeding because that's the natural rate. Also, we do not run surpluses with many trade surpluses with many countries in the world. One of the few countries where we run a big surplus for $20 billion is America.
Okay.
And America has slapped a 50% tariff on us. So you are not able to export to America.
So we need Americans more than Americans need.
We need American trade more than the Americans need Indian trade.
Okay.
Forget the Indian American.
Yeah,
Let's not
just purely
make
on trade. I'm talking about just
on
numbers.
trade. You need the American business more than the Americans know it. That's why they have slapped it on you and they are waiting for you to negotiate.
Okay.
Every time we delay negotiation is a pain for us. This Christmas season, Christmas and Thanksgiving, Christmas and New Year is the biggest shopping season in America.
Yes.
This year is washed out because we are already on November.
Yes, you can't send your goods even if you signed an agreement. You can't send export fast enough to reach the shelves there.
You can't manufacture and put it on the shelves. For Christmas, goods must have reached American ports by now.
Yes.
So this season is pretty much washed out. So this is the problem. So the only way to naturally adjust this is they allow the rupee to fall.
Okay.
And this is why we have been investing abroad. We knew
Okay.
this was coming. The rupee will adjust. We have invested abroad. We have invested in gold, irrespective of what happens in international market. And the companies which we have looked at in India have a substantial amount, except ITC. All other companies have substantial money coming in dollars, be it Bajaj Auto,
Okay.
Tata.
I have one doubt, which our viewers will have after you said this. That the rupee should be allowed to fall. If the rupee is going to be allowed to fall in a future date, because there's no other way to defend it, like you
The
rightly
market
said.
will push you to do
Yeah.
it.
Then, if I'm a foreigner and I'm thinking of investing in India,
You won't. Why will you?
no, but if long-term investing, I might as well invest, right?
See, if you are investing in bonds in India,
Huh.
and you have get good bonds at 10 to 12%, it makes good investment in India because even the rupee depreciates 3
That's what I
3%,
want them to understand.
3%, you are still making 7%
Yeah,
in
because
your
we are looking at, you have to tell us that in advance. Why you're telling us, if you're an outsider, investing in Indian bonds still makes sense.
because what Indian bonds make sense?
Correct.
What interest rate? You are paying 6%, it doesn't make sense.
So you have to look at the math.
Yeah, if you're getting a 7% interest, it doesn't make sense. 7 minus 3, 4, you'll get 4 in a good American bond today. 10 minus 3 is the differentiation for every year. Some years it may be 4, some years it may be 2. But
Understood.
average is 3, 3.5.
Correct.
10 minus 3 is 7.
Correct.
You will not get 7 in a good quality company there.
Understood.
11 minus 3 is 8.
Understood. So this is the math. I'll actually do a separate video highlighting the math as numbers, what Anand is saying, because today we have already run the clock, which I will promise to do. And thanks for being with us today on Be Rich. Anand gave us some insight on how this deficit works and why you should look at investing, which either way you're looking at investing. From India, looking abroad, why is important, and even if you're abroad and looking at India as an investment, which parts of India you should look at investing. He has eloquently explained to us. Thanks for being with us on Be Rich, and we'll see you again tomorrow. Thank you.
Thank you for supporting PH.